Welcome to our Friday live profiling Q&A session. This is your first time, just a little bit of housekeeping before we jump in, but first we're mindful of the fact that anytime we look to express risk in markets, or opportunity in markets, there's risk. We need to be mindful of that. And we talk a lot about defining risk, understanding how much we're willing to risk. That's the only thing that we can actually confidently control and have confidence that we can control is how much we risk. So you need to be aware of that. If you're not, I'd encourage you to keep the money on the sidelines. A little bit about me. So I'm Josh Schuler. I'm the founder of Trade Profile. We've been around for a little more than a year now, working to develop and deliver consistently profitable traders to the market. So we're a skill development firm. JP's the other part of our team that I haven't seen jump in here yet, but when he's able, he will join us as well. And between the two of us, we're trying to take traders through a process of development that starts really with consistent. Can you have an approach to markets that you can consistently and with positive expectancy extract value from the markets. That's the name of the game. And each week we're looking at a different thing with our community. Next week we're going to be talking about this specific dynamic. So we're going to do a little preview today, and then also open the floor to any other questions you might have about trading, about the profile. This hour is for you, so please use it. Some of you are part of our community already, so it's extra credit for you guys. For those of you who have not yet come to see what we're doing, this is an opportunity for you to get as much value as you can. But we're going to use the profile to confirm or negate moves. Basically, you've seen a directional move, and you want to know, should I go with it or should I not? That's the question. And it's this challenge of, I see prices moving directionally. Should I go with it or not? If I did, how would I know that I was right, and how would I know that I was wrong? Anytime we define a trade, we talk about 4 questions that we ask. What's the opportunity? How much am I willing to risk to go after that? How would I know that I'm right? How would I know that I'm wrong? This is built into the heart of our pathway and our development work, which next week we're going to be talking about this idea of acceptance and rejection. So acceptance and rejection, as seen through the profile, is how we answer that question, how we go after that challenge. So here's the risk if you don't have your arms around that, is that you'll often become trapped with poor trade location. You will chase trades that have been rejected, and you will fade markets that keep squeezing you. So you don't have to raise your hand to say if this happened to you, but you see a directional move, so you go with it, and it seems like immediately after you go with that move, you're in pain, like the market's reversing back in the opposite direction. Or you look to see, you've seen a move and you think, hey, it's going to revert, and so then you fade that move, you take the counter position, and it just keeps squeezing you. Understanding acceptance and rejection and how we can see that helps us figure that out. And the principle behind that is that it provides indication of zones to participate in and which to avoid. So want to just go over the screens here real quick and show you an example that we were talking about earlier this morning in the Russell 2000. So we're just going to look at like a weekly time frame here. So we're looking about 5 days of trade. And one of the things that you notice is on this is a histogram. This is a profile of volume at price. So this is showing you over the last 5 days, where was the most accepted prices, where I could find both buyers and sellers willing to do business at those prices. What are prices where we couldn't find buyers and sellers willing to do business? So areas where we find people will do business, that we call those an area of acceptance, and areas where they don't do business, we call it an area of rejection. So just looking real quickly, I can see on this chart, here is the most traded price. That's the highest area of acceptance. Then there's an area kind of in here. There's another one here. There's a zone here. and then we're kind of working on an area right in here, right? There's areas of rejection. So these are all the low volume areas. See, there's like a pocket right here where we didn't seem to do much trade, here as well. And then there's an area up here at the top and the bottom that we don't know yet. But if the auction gets up here and can't find both buyers and sellers, then we may reject price and move back lower. What does that mean? It means that if I'm looking for a move, if there's a move that starts in, like here, if it starts in an area of acceptance, that could be early. And so I'm less likely to have that condition of I see an extended move and then it reverses on me. Now there's other challenges in here as well, but it's a way to be early. And then if I'm up here and this profile continues to thin out because I can't get additional participants in those directions, then that's an opportunity to look for the counter perspective. It just defines a zone, and that's really what we're trying to identify, because we believe that there are better prices. We're looking at acceptance and rejection of prices, and we include those as part of our trading plan. So, trading plan every day is where you come in and you're saying, okay, this is an area I want to be active at. Here's an area I don't want to be active at, and there's a difference. Performance is impacted based on how these levels and ideas are brought into your plan. If I go and look at, we'll just go look here real quickly. You'll see this morning, and these were levels last night, but you can see how much trade we have done over and over. We spent 2 hours really in this zone here. That was an area that I was interested in last night based on how yesterday traded. We have other areas down here that are large areas of acceptance. We're actually building out further. You can see the difference in the color on this profile. That's showing you older prices versus newer prices. So we're actually reaffirming these areas of acceptance. We've got an area of rejection above, and then we've got another area of acceptance. So in terms of using that as part of my plan, based on a setup or a trigger that I'm looking to trade into, I can use those areas. So I'm actually really interested to see if we could get up to this 55.15 today. I'm expecting the auction to slow, because that's the other thing that happens. You get into area of an acceptance, the auction slows as you get there, giving you an opportunity to make a decision. So that's one way that we use acceptance and rejection. Another way that we think about acceptance and rejection is to look at let's zoom in here on a smaller time frame. Okay, here is a breakout. This is a 5-minute period right here. These are 5 minutes that are nested inside of a 30-minute profile, and you're seeing an impulsive. Let's just kind of see what's happened here. So you have an impulsive buying move that engulfs the prior 5 minutes. That's actually, that could be for some people a trigger to be long the trade, right? So one of the ways that we see acceptance is do they continue to support wherever this move started from? So notice that there was almost half an hour that the auction supported these levels. So that was actually acceptance higher. But now what's the problem? The problem is it didn't follow through to the upside. So how we use that is we go, okay, this went higher. If say I had a target and wanted to be long, which we have this one up here, I could use, new lows in the bonds. I could use this area, as this is an area I need to defend to get me long in here. I'm going to buy in this area of acceptance. Now what's happened is, they tried to punch, make new highs, didn't, rotate back through, and then if they take out this low, that negates all of this, and now the hands go to the sellers. That's really confusing. I mean, because what's happening is there's multiple time frames taking place. Part of what caused it to fail, even though on the 5-minute it looked like it was breaking out, but if you look at today's profile, it was running out. All the accepted prices were lower. See that? So when you're looking to trigger, one of the things you got to ask is, okay, what's my opportunity? Where's my target? What am I looking to do? And then how does that fit in terms of a multi-day and the intraday with respect to these areas of acceptance or rejection? So we're back to an area of acceptance now. That actually would have been like the trade that we're looking for is we were looking for a move up here that got up here and then found sellers, and then we were going to look for it to come back to this area of acceptance. So you can actually use these areas of acceptance, of prior acceptance, as targets, which can be really fun. So that's just that's like a quick primer. I mean, we can keep talking about this and looking at it, but and we'll find some other examples. But I also just want to like open the floor for anybody who has any questions about this and or anything else with respect to markets, trading, or even if there's a specific product that you're trading today that you want to take a look at, get a read on. Happy to do that. And you can use either the Q&A or there's the chat box to ask those questions. Fair enough? Awesome. Okay, 57. All right, we got a question here. That's a great question. So how do you keep yourself from getting chopped up in these areas of acceptance when you're trying to establish a position? So one of the ways that you keep from doing it is having a defined setup that you're looking for. So we try to be able to read and discern the auction and where it's going, but then inside of that, can we express one of our setups or approaches inside of that? That's a way that we further help define that. And hang on 1 second. Make sure I'm out of this position. All right. Sweet. And I'll give you an example. Okay. So let's use crude as an example here. So an anchor trade in our playbook is something that we call an IB go with or an IB extension fade trade. So anybody who starts with us, like that's kind of where we start. We start looking for one of those two trades every day in the product that we look at. And there's lots of reasons why we look for that trade. We look for that because there's stats, there's probabilities around it, there's stats around it to affirm that. But yesterday was what we call a neutral extreme lower day. It was an engulfing RTH session, strong volume. So that this session here negates this session moving higher. So the auction had actually tried to move away from a prior area of acceptance and then rejected those higher prices, is now returning back to a prior area of acceptance. So the plan today was to see us trade basically back to this 53.30 area. But we don't know, is that going to come right off the open, or is that we're going to go higher and then lower? So we look at that IB extension, if we can get outside of the range of that first hour, as a big clue. Well, so we traded higher early into one of our areas. Actually, we were looking for, an early push up into this was actually ideal, and then they would fail and go this way. But the confirmation on the trade would be we would trade below the IB. Now, I won't go into all of it, but the fact that we took out the IB high in crude oil means that there's really only about a 10 to 15% chance that we'll see below 53.93 today. So, that desire to get to that 53.36 area today is now kind of off the table. That being said, we're still looking for shorts as follow on for this day. And unless we made, higher highs on the day, it's the seller's auction to lose. So then we're looking for areas that we can, express that. And one of those is with an IB go with trade. So we had the IB extended. So then once we see the IB extended, that tells us in the day time frame, we've got buyers in control. In the so what we were looking for is a pullback into this area, like 59.29 or 20 that didn't get below the open. This was after we had taken out this high to be long up to 54.92 or 55.15. However, if it went straight up to 92 without giving us a pullback, which it got within a couple pennies of that, then we were looking for an opportunity to fade it back to the day's point of control. And that actually is some of the trade I just taken off, was it was fading back. So one of the ways that you stop getting chopped up is that you know you have a setup expressed inside of a larger narrative. That kills the chop pretty quick, actually, because you're like, okay, here's this thing that I'm looking for. If and when that happens, then I can execute. Here's another example. So this is the NASDAQ right now. So today we knew they had a key level at 6,900, which you can see we're just trading right back and forth around that. This is a perfect zone to get chopped up. And you could be really active in here and just think that you've caught the breakout, and you don't. You haven't. So what we would say is we got to wait until we either trade above the IB high or the IB low. Until then, it's just a chop game. And not only that, but we're inside of yesterday's prices. So we're in a key area of acceptance. We know that there's a move coming. We don't know, and there's going to be false breaks. So it's best just to wait. So if we take out IB high, that makes it the buyer's auction to lose. We would look for, I think we had a target. Let me see here. So we look for 69.50 to 69.78. That's the stat. So 69.50 area. What we'd look for if we can get if we get a pullback. So here's the sorry, let me slow down. If we trade above 69.30, we'll look for pullbacks into 6,900 that hold, and then we'll look on a smaller 5-minute time frame for a buying order flow to come in to target 69.50. If they go straight to 69.50, okay, then we'll look for excess and rejection of the higher prices. One of the ways we'll see that is we'll see the taper in the profile, and we'll look for a short time frame trigger to rotate back towards 6,900. That reduces a whole lot of chop. It's a good question. Most find a lot of traders can typically find a like some kind of trigger pattern. And okay, let's look, because I think there've actually even been some where you could go. Like here's a potential trigger in the NASDAQ, just from a price action standpoint, is that you had selling, looked like it was accepting. So another way we see acceptance is additional periods in the direction that you're looking to trigger. So that early on would have said, hey, we were going lower, I need to go with it. And then they rip you this way. And then, it goes and it looks like they're accepting and looks like you're going to go, and then they rip you this way. And then, looks like you get a trigger, you get a higher high on a 5-minute here. And they, accept that. So it looks like you can go with it, and then they run a stop. It's just a great way to get chopped. So you basically just wait for a larger confirmation. And would we enter when it comes back to accept? So yeah, it's an if this, then that. So it goes, hey, if we take out, we have to trade 62.31 or wherever that exact IB is high first. We have to trade that first. And then if that happens and we've got 69.50 as a target area, if we get a pullback to this area that comes first or lower, and we get some kind of price action trigger, we'll look to be long towards that target. And we would be wrong if we took out the IB low. If they take this out and then just go, okay, then we would look for that 69.50, 69.7 area and look for a 5-minute short time frame trigger that would get us in where we could set the risk in a risk to reward ratio and target. We've got a killer target, rotate back there. So it's just I don't know which one it's going to be. It's going to be one or the other. Now, what happens if we don't take out IB high? What happens if we take out IB low? Well, there's a different trade setup there, and we came in today with our plan of we've noticed some poor structure. There's some single prints in the profile. There's some untested naked POCs. There's basically single prints from here to here. There's a 6,800 to 6,790 area that would be interesting. So if we take out IB low, then we would look for pullbacks up into this area. Risk would be the high, and we would target here. If they take out IB low and just run, then we would look into this decision zone, because on the day time frame, it would be moving away from an area of acceptance. And so the further you get away from this quickly, the more likely you are to get trapped. So then we would look for a trigger to trade back toward it. It's really cool. It's very effective, and you can do it every single day on the product of your choosing. The hard part is just the patience and the waiting. So we use alerts a lot for that reason, so that you're waiting for that confirmation to happen first before you start getting all fired up. And let's see. Okay, so that, yep. When it seems that excess is forming, sometimes there's a bump of volume towards the top or bottom. Does that suggest anything for you? Does that cancel or negate excess, basically? So one of the things that you're looking for in a directional move that's part of acceptance. So like, let's say that we're moving higher. I mean, there's nothing saying we have to rotate lower. So just because you get up here and it seems like there's excess forming does not mean just sell that blindly. Instead, it would be, okay, let's say, if these are 5-minute periods and we trade like this, and then we pull back, and then there's like, say there was a spike that started here, a big volume that started the move out, and then there's another one, and then it seems like you're rotating back in, and then there's a spike right here. Okay, that would be what basically saying is the auction is attempting to go higher. Pullbacks that don't go back to the origination place invite more participants. So that move is not done, and then you would be kind of waiting to see, could they cancel out an area like this? Can they continue to accept? Until a point that you get an equal move in the opposite direction that cancels out whatever that last move was. That would shut it off. Behaviorally is what you're looking for. You're looking for that behavioral shut off. IB high, you're looking for a breakout, then a reaction down. On the IB high, if we hit IB high, I don't know if we are. I mean, I think my assumption is that the more we can hold above 6,900, the more likely it is that we do, because yesterday was a bullish day. So holding, this is also a daily acceptance, right? So if we go to a daily, this is accepting those higher prices, which would say we're likely to go higher before we go lower. So with that breakout, I just don't know. I don't know how fast. Let's go put some lines on here, so you can kind of see that 69.59 area. Okay, I don't know how fast this thing will break out, and it may move, like, all it's got to move is one tick above that, and then I'm waiting to see, can it pull, which comes first? Does it come back here first, or does it go there first? Which one is it? And that'll tell me whether I look to fade it or whether I look to go with it. So right now I've got alerts here and back at the open, actually. Like, that's kind of where I'm at. And until one of those triggers, I got nothing to do in this product. Although it looks like we're getting close. Let's see. Let's see. Beans. What's ES doing? So so here's an example. ES does have initial balance extension higher. Oh no, it doesn't. Not yet. Still not. Still waiting. Yeah. So we're just waiting to see. I don't know. So like, like here's another example. Here's fat cattle, Scott. Which if you want to, by the way, if you want a product to trade in the future space that will keep your day short, fat cattle is it. It's only open from 9:30 to 2:05 p.m. Eastern. It has no Globex trade at all. But these behaviors exist on all time frames. Yesterday was a big day, really, really big day. Went higher, and actually, you know what? This is good because let's expand this. You'll see what I'm talking about in terms of these of the rejections. This on a 30-minute. Early on was accepting where value was, pressed higher, and then see in this period here you got a lower low. That told you that all of these guys were now in jeopardy, and you could use a 5-minute, a smaller time frame trigger to further tighten your risk to look for a return back here, and then they really squeezed them. Squeezed them so much that we created a bunch of single prints in the profile. But now we've got a big area to kind of sell into before the next move lower. But today, I've got IB high extension so far. So buyers are in control. They're actually accepting these prices. 1.5 gets me here, 2 times the IB, but I'd really like to get this place. But there's single prints here, so I'm actually looking for, can I get a move back down here like 126, 125 that comes before a push to 126,950. That could be the long trade today in an overarching perspective that the auction is moving lower. So I'm like, I think it's got to go higher to find more sellers. So I could be long with that, and my setup allows me to do that. But again, I have to wait for all the criteria per my setup to work before I would do that. And if we trade here, and I've got an alert here, if we trade here first, then I'll look for, it could be that this is like an intraday spike or intraday gap. It could be that this actually holds the auction lower and we find sellers, and we would rotate and look for a target back here. But see, if that's the target on the fade trade, I should not be active here. So I either need to buy it below that and look for rotation back higher, or let's get above this thing and then rotate back in the day time frame. Let's go see what crude's doing. Okay, there's still some opportunity here in crude. So see, they made a lower low here in the 30-minute. That means I can go over here and look at a 5-minute now and say, okay, I've got a target one on the retrace would be 54.40, which we've already tagged once. And I would love new highs after, with the fact that we've got a lower low, because it just means that we're likely going to get some kind of rotation back lower. So I'm looking for some kind of shorter term. Now that I have these conditions, I can say, all right, I'm looking for a shorter term trigger. I'm looking for moves out here towards the excess of the day to find responsive activity that takes me back in. Yep, still sideways. Still sideways. Bonds, soybeans. side by side so we can kind of see them. And I just, you know, like I just turn off, this is another way you keep from getting chopped up, is you just turn off the shorter term stuff because you know that there's nothing there for you yet. And that's okay. What other questions y'all have? Any other products that you want to look at? I'm happy to take a look at those, see what we can find. I mean, I look for, you know, I look for a trade every day. I mean, primarily I look for a trade in crude and NASDAQ. When we were more volatile, I was looking for that trade in the ES. Yeah, like this. Keep pushing up there. Oh, this is a great question. So everybody see Tony's question. He said, would you trade differently based on the trading day types? Yes. So one of the things that's incumbent for the fade trade to work is that you're not trending. So if you're trending, then it's just not going to fade. And one of the ways that you know that you're trending is that you're getting a higher high, higher low in every 30-minute period. So we were trending until this last period where you can see we got a lower low on the 30-minute. So that reduces the probability of the trend, increases the probability of success on the fade. That's a great question. So yeah, understanding your day types is very helpful. Quite helpful. And in auction theory, we define 5 open types and 7 day types. Go, crude, go. Get that 92. Do it. Yeah, great question. So when you go with an IB break, that would be nice in a trend day. Yes. You just don't want to fade an IB break that doesn't pull back. And that doesn't, you don't see enough counter behavior to give you confidence that it's not trending. yeah, that's where you would see max pain. One of the ways that you do that is, you know, through auction statistics. We'll look at the what's the range of the initial balance relative to its average. So if you have a tighter initial balance relative to its average, you're more likely to get more significant extension. If it's about average, and what I mean by that is, so look here, today the ES has 69 ticks of IB range. The average is 113 ticks. So I mean, we could break hard out of here. So even if I get the IB extension, that's why I want to see like a lower low on a 30-minute would be kind of the first thing to tell me it's okay to go against that. That's one of the things that can, or you know, if I had a super wide, oh no, wait, I'm sorry. The average is, we have a wider than average. So we have 69 ticks. We average is 57. So in that scenario, it's more likely to have a rotational day. So you're going to have less probability of extension typically. Yeah, I can go. So the question is, can we go over some different day types? Absolutely. So there's a couple. Let's just do that by looking at these live markets and then, you know, and kind of defining them that way. And a second, we may get a trigger here in crude. Let's see if we can go get that. So today, we have an open auction inside range. And how do we know it's an open auction is where you get two-sided trade. Right, so it's an open auction inside range, open type. That's the most prevalent open type that exists. You're going to see that more than any other open type. And then this is actually what we'd call a non-trend day. A non-trend day is where we have not extended the initial balance in either direction. So they don't occur very often. In fact, in 3% of all trading sessions, we get a non-trend day. 97% of the time, we're going to extend the initial balance, which is that's pretty awesome. Crude oil. So crude oil, this is a open test drive, open type. The reason that it's not an open auction range is because there's not much overlap between A and B period. And there's an open, it tests real quickly in this other direction and drives higher. So that's a directionally convicted open type. Typically leads to a trend or normal, what we call a normal variation higher day. So normal variation higher day is where you have rotations like this, where you have lower lows and higher highs. And you'll see typically up to 2 times the balance width. Okay. That's what makes this really attractive, and that's where this 2 times and 1.5 become active. So like right now, this could be a normal variation day, or it could be a normal day. If we get back inside of this initial balance range, that's a normal day, is where you're rotating back and forth around a point of control, and most of the trade remains inside of the opening range. That's a normal. So in this case, it would be a normal higher day. If we had IB low extension, so like in soybeans today, we have a normal lower day, I believe. Okay, so here's Here's the initial balance. You've got rotations, higher highs, lower lows. It's rotating back and forth. You got IB low extension. So this is a normal lower day right now because most of the range occurred in the first hour. Bonds. Okay. Open auction in range. And then this is so far what we call a double distribution trend day. So one of the characteristics of a trend is that the high of like a trend lower day, the high is going to be in the first hour, the low will be in the last hour of the session. And what makes it a double distribution is that there's an area of single prints in here. So there's one distribution of volume, and then there's another distribution of volume. It's a very directionally convicted day type. And each week, as part of our pathway, we hone in on one of these each week to look at, just to kind of give us a more understanding of what these things are and how to use them. I mean, this week we were talking about open test drives and how it sets your expectation. So like with crude, if you see an open test drive, that's a good indicator that if you want to, if you see an open test drive open like this, I can give you a great way to lose money is to be active in the first hour. Because if it's an open test drive higher, pretty good chance you're going to take out the IB high. That means, an hour and a half from the open, you're going to see that higher price. So if you sell anywhere in here, really high probability that you're going to lose. So don't do it. But if you can't recognize those structures, you just think, oh, it's moving fast, it's going to revert, and then that's where an amateur sells into this stuff, and then they just get squeezed all day long. So that's kind of a high level of some different day types that we look at. I mean, the biggest ones to look for are, open auction inside range, normal day, and normal variation day. And that's because those encompass most trading sessions. They really do. We only trend. One of the ways that you have a trending day, typically you'll see exceed 2 times the initial balance width. That only occurs in about 17% of all trading sessions. So if you think about that, if I get 100 trading days, I'm going to get 17 of those days where I'm going to exceed 2 times the IB. And trend days typically do that. They exceed that. Normal variation will get up to it, but they won't necessarily exceed it. Yeah, and the extension statistics, I mean, that's 97% chance that you will extend the initial balance every day in any product that you look to trade. You'll exceed that IB range. You'll get outside of it. Now, there's about a 70% chance that you'll only exceed it in one direction. So a neutral day, which we don't have any neutral behavior today. We had neutral behavior yesterday in crude oil. So let me shut this off here, and you can see what a neutral day looks like. Okay, so that is where we have an initial balance, extend the IB high, come back to take out the IB low. In fact, this is a neutral extreme lower day because we closed on the low of the day. That is a very strong directional day type, which is why we got lower prices here and why we're looking for shorts overall. We're looking for the auction to go lower based on this, unless we trade higher first. That would negate all of this, but that's a neutral extreme lower day. Neutral behavior is when you exceed in both directions. So that's a rare event. It just does not happen very often. So how we use that is that allows us to have a very clearly defined risk parameter. So once I've exceeded this one, hey, there's only a 30% chance I'll take out that one. Cool. I could use that. That's a better than 50-50, right? That's a better than 50-50 probability. I like it. Good question. All right. Look real quick at my plan. Yeah, the Russell was the only one that was really over here and look at. Yeah, so see, we have IB high extension in the Russell now, so there's only a 30% chance that we take out the low. And we're building out, you know, a decent node here. So that's an area of acceptance that'll hold this auction up. Now there's a, you know, there is a potential trade. The potential trade is to look for, you know, it to get up here and fail, and then look for it to rotate back toward this high volume area. So it could be a potential. Let's see, make the 5-minute low on that one. Russell is not as liquid. And delete some stuff off here that I don't use. Nope. Nope. There we go. Oh, wait, I also need to, is this on the 5-minute? Yeah. Oop. There we go. You can see we're inside of that IB range there. Normal higher day in the Russell. Charts as clean as possible, my friends. So, you know, rotating back and forth, there's a you know, decent probability, especially if we get, you know, towards that 50% or extension, you know, to look for rotation back toward the point of control down here at 15. So there's, you know, still opportunity, but I want to make it fit my criteria there. Right, so that. Store these. We got about 10 minutes, gang. What else you want to cover? If you find that, you know, you'd like some additional confidence in going with a move, or knowing when that move's over, spend next week with us. The only thing it'll cost you will be your time. But spend some time with us and see how you can add that to your arsenal. And it just rotating. Yeah, you got to register. Yeah, the link is hang on a second. See if we can get that 1500. Yeah, let me. I'll post the link here in the chat. And it'll also go out this weekend. Use this link, register, tweak. It's a 7-day trial, so that means like you won't even though it says that there's the monthly price on that. That's you will not be charged for the week. So if you don't cancel, if you decide, hey, you don't want to go forward with this, that's great. Just cancel before the week's out, and you got to spend a free week with us. But use that link to sign up and get started with us. The question is, would I have considered a short at the current day's value area high? Nope. Value area high is not a metric that we spend a lot of time around. We have not found a lot of edge that we can exploit there. So the other aspect of that is why I wouldn't have gone for the short is that that's about the area that the point of control was, and that would have been my target on a fade. So I basically would be shorting at my target. So the only way that would have made sense in this price area, Ivan, would have been if you were assuming that we were going to go take out IB low and you were trying to front run that. So then you're going, hey, here's my opportunity, and then here's my risk. Then that trade makes more sense. But that's not a value area high, value area low trade. That's just a hey, look, crude's getting to that 92. Nice. Punch it. Go get that 55.15. That would just be awesome. So now I'm in the area that I want to look for a short trigger here. I want to see this push here. So this should lead to higher prices. So I'm gonna see if they can accept this. I'm gonna see if they can accept this. Maybe get up here, run out of steam, and now we've got a really cool target, back into this area. Look at how they're running out of participation as they move higher. So if you're shorting up here, this is an area of risk, absolute area of risk. Or if you're long here. So this could totally set up the short. I love it. I love it. Let's see if they give us something good here. Look at that. Look at them pushing lower in the ES. That's interesting. Same thing, NASDAQ back below 6,900. It could be fun later this afternoon if they can get below that IB low. I like that trade too. We will see. So here's a trade on the crude. I'm in the area that I want to be short on. This 5 minute here, if they come back through that place where that started, that would be, I could basically sell anywhere up to 5,500 and look here. I don't like that risk reward as much. I'd rather them hold this 5 minute, get another 5 minute, make a lower low on that 5 minute, then I could, sell basically in this area. Here's my risk window. Here's my target area. And that's a nice like 3-to-1 risk reward. Let's see if they allow that to happen. That would be fabulous. All right, while they're doing that, here's some. slides away. Let's talk some next steps. How to practice this. This is what we'll be practicing as a team next week. So you're going to identify impulsive order flow spikes and note the context and whether there was follow through or failure. So like this, you're looking at this crude. Here's an order flow spike higher. If this is legit, this is going to bring more participants. And we know it could get up to this 55.15. If it's not, if it fails back through the area that started, then all of these buyers are trapped, and that can increase, you know, the move back towards 40 area. We'll work on that next week as part of our pathway. So spend a free week with us. Those of you who have not given us a shot, we'll spend 5 hours of video sessions, talk about trade ideas and anchor trades and quick sheets and log sheets, and it will be worth your time. If you're on Twitter, follow us at Twitter with Trade with Profile, and Facebook is Trade with Profile. And if you have any questions, you can always send us an email, team@tradewithprofile.com, or you can call or text us at that number. That is all I've got for you this week. We'll be back next week. And right now we're kind of looking to see which way the equities are going to go still and see if they can accept. See what they're going to do with this move. If they accept this move, if they hold this area, that could be a push up into this zone. Which actually, I mean, if I get a risk reward zone up here and be short for the move back in here, like, wow, that's a really cool trade. I hope they give it to me. I would like it very much. Thanks for spending time with us today. Hope you all have a great weekend. It was a busy week of economic releases. It's made it a good week it was just a hard week of trading. Next week, not so much. we have Google earnings. That's kind of the big dog. But outside of that, should be more normalized. Yeah, I hope this helps, you know. If nothing else, I know everybody's got, you know, different time availability and different things, but hopefully this is steering you in a direction that will support what you're trying to do. So and y'all can watch. You can watch crude. You kind of know what the plan is, and we'll just see what happens. See if they can get below that. So this is buyers, more buyers. They're holding these prices from this scene of the, you know, where this started. This area right here. So if they got to get back through that, that would cancel these buyers out. Let's see if they get that next push back up in there. That would be really cool. And for those of you who are already part of the team, I'll be updating this crude thing in Slack. So if that triggers, you will see it. Okay, everybody, have a great weekend. We'll talk to you next week. Peace.